In today's video, I'm going to take a look at oil. Um, it Commodities in general and oil especially have been moving down into that 3-year cycle low that started right here at this peak in back in March of last year. We started the declining phase of that 3-year cycle. Possibility maybe that oil completed that move yesterday. We've got a swing low today. And oil is, let me zoom in just a bit. Oil is threatening to get back into this consolidation zone right here. I warned people over the last couple of months that oil was probably going to be choppy and not really tradable. And I watched as people would get bullish at these peaks, and then we would, it'd sell off. And then the same thing would happen over and over again. And I tried to keep people on the sidelines here. Expecting that we needed, at least a little bit lower low before the final bottom was in. And that's exactly what happened. This just whipsawed people to death, trying to pick a bottom too early. And I think it's probably still a little bit too early. This was a huge move from, actually this was like negative 35, I think, for a day or two. In oil. That was the bell ringing that the long-term bear market in commodities was over. And then we had this massive rally, culminating with the invasion in Ukraine and that huge spike in oil. And then that was the top, and then we began the declining phase of that 3-year cycle in the CRB, and oil is the main commodity of the CRB. So it's been in that declining phase for the entire time. So, a chance anyway. Too early to tell for sure, but a chance maybe that ended yesterday. I would say if oil can get back up into this consolidation box, then that probably was the bottom. But I doubt that it's the end of the difficult period just yet. It looks to me like oil is building out this large rounded base. And if that is true, it means we're going to have more choppiness on the backside of this bottom before we can really start to get some upward momentum. And that's, if you want to trade energy long, that's a good. You actually want to see that kind of pattern. We want a really long, frustrating sideways basing pattern. The longer that base is, then the higher the move is going to be once we break out above that base. So I think probably what is happening and what has been happening since this secondary peak is we're building a base to power a move to, I would say, at least $200, maybe even as high as $250 during this next 3-year cycle. But we have to finish this basing phase. It's not just going to bottom and then, rocket launch and we're off to the races. That kind of a bottom probably would not produce a move to $200. But a rounded base that takes time to complete and then, finally get some momentum on the backside of this year, that is the kind of base that could drive a move to $200 or $250 during this next 3-year cycle. So even though I think there's maybe a chance that oil has put in the final bottom here, and this was a slight undercut of the 50% Fibonacci retracement of this entire first move out of this final bear market bottom. So a minimum that I like to see is a 38% Fibonacci retracement. This went deeper than that. It went, like I said, slightly below the 50% retracement. It has tested this support zone right here. So this is a prime spot for the 3-year cycle low to bottom. If I convert this over to the weekly chart, you can see oil, pushed quite far above this 200-week moving average. And then it, with this recent breakdown from this consolidation zone, it's come down and tested that 200-week moving average, just like gold tested the 200-week moving average several months ago. So I think this is a prime spot for a bottom, but I think we probably got at least another month or two of difficult choppiness to continue building out this base, and then that will create the fuel for a move to $200 or higher during the momentum phase of this next 3-year cycle in the CRB. All right, so let's go over to the chart of the CRB, and I'll show you what I'm looking at. So here is a 3-year cycle low. This was kind of a long cycle. It stretched a little bit. This was when oil went negative. That was the bell ringing that the bear market in commodities was over. And then we get this first really powerful 3-year cycle. Goes well above the peak of the last 3-year cycle, even tests the peak of the 3-year cycle before that. Clearly, we're in a new secular bull market in commodities. And then here we have the move down into that 3-year cycle low, which, again, like I said, may have ended with that tag of the 200-week moving average in oil. And then, again, I think we probably got more choppiness probably into summer. Before this is going to be ready for the next leg up, and that leg, the longer this choppiness and sideways goes, the bigger the base, then the more likely the next move up is going to send oil to $200 and or higher. And I think during that phase we're going to get our bubble phase in gold. I've been on record saying 5,000 is going to be a piece of cake, and we might even go as high as 10,000 during that bubble phase in gold to come during this, I think, the advancing phase of this next 3-year cycle in commodities.